How to gain leverage and generate more profits when you expect your asset to move higher. On Divergence, this can be done by having a long asset position and buying a binary call. We'll show you how your payoff looks using this strategy. First, let's say you own 1 Ether. Your profit or loss is linear. You get the price difference to your entry at the time you sell it. If you buy a Spear token using a fraction of a stable coin like Tether, you are buying a cash or nothing call. At expiration, if the Ether price is above your strike, you can collect 1 Tether as your option payoff. Your profit in this case is the difference between 1 Tether and the premium you pay. Otherwise, you lose your premium. Now, let's see what happens when you long 1 asset and long 1 cash or nothing call. If your asset is generating yield somewhere in DeFi, you can use that yield toward your call purchase. This way, you don't have to pay anything out of pocket. Suppose your cash or nothing call has the same strike as your asset entry price. Your asset position will be underwater if its price drops below your entry, and you lose a fixed amount of cash in your long binary call position. When the asset settles above the strike price, your asset makes you profit, and you get paid by your long binary call position. You'll notice that this payoff structure looks similar to holding an asset and selling a binary put. This is because the combined value of a binary call and a binary put equals 1 collateral. As you can see, this strategy can be used when you are bullish. If your asset continuously moves higher, you can buy a strip of binary calls at different strike prices. Anyways, let's remind you that options trading involves risk. This is not financial advice. We hope to see you soon trading on Divergence. If you have any questions, you're welcome to come and ask in our Discord or Telegram channels.